Okay, so the income statement starts with sales and slowly whittles it down into profit. Now the equation for profit is sales minus costs equals profit. So these costs is what we have to work through in order to get to profit at the very end. However, just like sales, accounting has some very specific rules around costs, one of which is called the matching principle. In plain English, the matching principle says that whatever costs were associated with the sale of the good or service that you just recorded on the income statement also have to be recorded on the income statement. That's a little bit of a mouthful, so let's go over it again real fast. Whatever costs were associated with whatever you sold, they have to match and go on at the exact same time when you record them both. So for example, let's say that I own a sandwich shop and I bulk order enough meat and bread and all that kind of good stuff to make 100 sandwiches. But today, I only sold 10 sandwiches. So that's my sales number, 10 sandwiches. My cost number isn't gonna be all that bulk order that I just made today. It's just the costs that are associated with these 10 sandwiches. So when these 10 sandwiches go on the books and they're saying, hey, we sold these, that's getting recorded as revenue, these 10 sandwich costs have to go on there as well. The other costs for the other 90 sandwiches, they're not on my books right now. We don't have to worry about them because they don't match anything. When I sell enough sandwiches later on, eventually those will come over as well. But for right now, just the cost for these 10 sandwiches I just made and sold, those are the ones that are going to go on the income statement at the exact same time. Now, this portion of expenses or costs are called COGS. C-O-G-S. Cost of goods sold. A little bit easier to understand when it's spelled out, right? And what it really means is that whatever costs go into selling that product or making that product, those are what have to be lumped into this COGS category. It's the first expense or cost category that we see on every income statement. So we start with sales, we take out the direct costs that it cost us to make this stuff, and then we get into everything else. So let's recap real fast. Just like sales, costs have a lot of rules too. One of which is called the matching principle, which just means that the costs associated with the revenue that you just booked have to match and go on at the same time. And then along the way, the first type of cost we're going to come up against is called COGS, cost of goods sold. And these are the costs that it takes to actually make and sell whatever you just made or sold.